If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
Okay, welcome to Health Further. We have a guest show today, Sergei Polevikov. Thanks for doing this. Really appreciate it. Sergei, you are the author of a really impactful newsletter called Health AI Uncut, and also you're wearing the t-shirt. You have the t-shirt to prove it, founder of Well.ai. Thanks for doing this. Appreciate it.
No problem. Thank you for inviting me, Vic.
So as we start off, maybe give the audience a little bit about your background. You were born outside of the U.S. and then came here, and just give us your sort of personal story.
Yes, thank you. By my accent, you can probably figure out I'm from outside the U.S. I'm from a small country, Belarus, middle-class family, which is by American standards probably very, very poor family. But, I had a good background. Both my parents came from science, from academia, so I had very good science and math and physics knowledge. Graduated bachelor's in Minsk, and kind of looking for applications of my math knowledge. And when I started looking around, I figured that a lot of topics in economics and finance, they were math-based and evidence-based, and that kind of intrigued me. And I started looking into grad schools because at the time there was, at least from my perspective, the most probable reason to get to a good school and maybe get a good job. So that's how I ended up in the US. I went to a couple of graduate programs here at SMU, been in Texas for a couple of years, actually. While being at SMU, Southern Methodist, I've met some interesting folks from the Federal Reserve Bank. And in fact, the chief economist at the time, Mike Cox, eventually became my boss. So I spent a few months and then kind of continued working remotely for Mike. And in fact, I was, I think, pretty instrumental contributor to his book, Myths of the Rich and Poor, which is kind of in line with my article that I posted today, which is basically, why is America so great in innovation, and what has gone wrong potentially in the last decade or two, because that book actually came out in 1999. So that was
exactly .com run up to the internet craziness.
Yeah, and a lot of the topics were popular back then. We've just started getting smartphones and not smartphones. I'm sorry, mobile phones, and a lot of improvements in technology and obviously internet, and that's how this whole conversation started. But the book is actually a very good overview of just historic wisdom and knowledge on innovation. And so I was kind of like a stats guy, so there are a lot of graphs.
How was it to come from Belarus and then be working at the U.S. Fed? That must have been an interesting transition.
I was surprised they hired me, especially with a name like mine. But no, it was a lot of fun, especially given that it was my first job, and I was still kind of being in grad school. So I started as an intern and then kind of developed into something more, and spent actually in total almost like 2 years on and off. So it was great. A lot of great economists, and I don't think people realize, but the Federal Reserve Bank's research departments are basically like your econ departments and top academic programs like NYU, Stanford, Harvard. Some top economists, they prefer sort of hands-on experience on the markets and inflation and various surveys. So they prefer actually being in the Fed as opposed to doing some research in academia. So really, really top top of the crop.
Yeah, I would imagine you
Research.
have access to the best data sources anywhere at the US Fed.
Oh yeah, yeah, absolutely. I mean, just having the databases and just looking at them all day long, and exploring and getting some insight. It was just like for me, like being at that, like in my 20s, that was paradise.
Yeah. Yeah. And then you went to the big times as far as like macroeconomics and tech, went to Wall Street and really spent some time there. Right.
Yeah, before that, I actually got my MBA from the University of Rochester, um, where actually I was lucky to get a scholarship, which is not very common, especially for grad programs, for MBA programs. But yeah, and then after my MBA, and on top of that, I always kind of been curious in the latest research. So I ended up in every program I feel like I went to, I was actually friends with PhD students as opposed to MBA students, which is kind of interesting. But I felt like this is where the cutting edge research was going on. So yeah, I got my MBA, got exposed to some cutting edge research in finance, and ended up on Wall Street as quant analyst in the beginning, and then developed into more portfolio management role. But always been around math, around statistics, around machine learning, and that was the time where the AI algorithms and AI trading became popular, and I was all kind of deep into that, and developed a lot of my own algorithms. I was in particular doing a lot of research on explainability. When you are a fiduciary working for clients, obviously they're asking, what the heck is this black box model? Can you give us more insights where all this great numbers coming from? And it's kind of funny exercise because you're kind of trying to find a story. So I feel like on Wall Street, it's a lot of storytelling, but in all honesty, you don't always have the answer. So we have all these great algorithms, but I think the biggest myth is that we can kind of explain the output, so to speak, and show the clients where everything's coming from, which is, to be honest, in most
Yeah,
cases,
it helps people feel good, but it's not necessarily accurate. I mean, the data is the software algorithms are doing what they're doing. You may have a predictive model, but that's different than being able to explain it.
correct. There is people don't realize, I think, even the ones that are dealing with AI models, but you know, uh, as I've learned over the years, there is no silver bullet. There's always a trade-off. You have a great model that you can get some great, let's say, accuracy or whatever the performance matrix is, but that's not always obvious where the results are coming in. Or you can have a model that's highly explainable, but it's not going to perform well. So those are the trade-offs you've been dealing with. And over the last couple of decades, I would say there have been some, especially in academia, there have been some good research that are kind of trying to converge those two areas and sort of basically make some kind of golden middle, so to speak. So that could be a good model, but also we not completely black box.
Yeah.
But again, it's not an easy task. It's a very hard problem to solve.
Yeah. So the reason I was really interested in having you on, you have a great newsletter that we'll cover in a minute, but Wall Street was really an early adopter of machine learning and AI in 2004 or 5, and then through the great financial crisis. And you were in the middle of that, where the really kind of on the frontier of how we could use AI in a business application. And now, of course, after the transformer models have come to the mainstream, now every industry is looking into it. But you're one of the few people that have had decades working in this space. So talk to me about in 2019, right before the pandemic, you founded Well.ai. And I don't know if that was a great time to start a company or a terrible time to start a company, but tell me about the founding story. What were you trying to accomplish with Well.ai, and how's it evolved?
I mean, I'd be honest, it was almost an accidental path for me, uh, and I'm very glad I ended up here. I think all of us at some point should be thinking, uh, not just about some financial outcomes, but also how we can give back to the community. And I think that's how it all started. Obviously, it's a business, so we're trying to make money. But then when it's combined with the idea that there's so much wrong with healthcare industry, and being the best democracy in the world, and unfortunately, I've experienced the lack of democracy, so I know how great America could be. I was shocked how bad things were and still are in healthcare. So it was actually my company, that I worked in finance was a restructuring. So I was actually thinking what my next move's gonna be. And one of my old friends, Daniel, who I met years before that, he's been involved in, various uh, bioinformatics projects, and just kind of did some work related to healthcare on academic side, but also on machine learning side. So he kind of had this pitch to me that he thought it would be great for the two of us to apply our AI skills to essentially help healthcare in some way. And our way was basically, essentially, initially, I would say we were trying to build a better MedMD, so to speak. Sorry, WebMD. We thought that with the latest developments in AI, we could literally put the sort of the real-time information into patients' hands. So there's this kind of big vision.
One of the things that I heard, I don't know if it was in your newsletter or in one of the podcasts you've done previously, that you really draw an important distinction between the caregivers, the doctors, nurses, other caregivers who are doing the best they can. They're great people. I mean, they're doing incredible work, but we're not really empowering them. We're not giving them the tools. And so that causes suffering for the caregivers themselves and, of course, for the patients. Because so that distinction of not really blaming the people that are there doing their best work every day, but trying to bring them tools. Is that a fair way to characterize it?
It's fair, and you have to understand the standpoint of clinicians and just medical community as a whole. They've been for 4 decades kind of the receivers of this endless sort of IT promotions. Starting with electronic health records, and every little IT vendor basically bombarding them with their little add-ons. And that's sort of the problem and in fact, the book that I mentioned in my article this morning by Dr. Jeffrey Funk that was released today on Amazon, he talks a lot about that. It's basically, and the reasons are very deep and complex, but the bottom line is that all the IT vendors in healthcare we have right now, or not all of them, but most of them, they're solving like little local problems. Like none of them are addressing big complex healthcare problems.
Little point systems, maybe.
It's a little here or there.
A whole bunch of little things.
Yeah. One doctor that I know very well once told me that, I open my computer, I have 100 apps. So my first question to whoever I talk to, he's a very kind of nice, kind man, so he wouldn't say no to anybody on the phone. But so his first question: why do I need app number 101 if I only have 100 apps when I open my computer or my iPhone, right? So the problem is that we sell apps. So instead of having this solution that kind of global and addressing the healthcare, every little startup, they have their own add-ons, for every little problem. So you have your this ambient scribing that kind of addresses one issue, one very little tiny solution, which is nice. Then you have somebody else maybe trying to API to an HR system. So every little solution is fragmented. It's not integrated into some big solution. And this is exactly what Dr. Funk is talking in his book. And that's part of the reason why we ended up here. And there are other reasons as well. But and so when we started Well.ai, it was actually, obviously, we had this great vision that, what, maybe we can sort of address the big issue, sort of getting as much information as possible to both clinicians and patients. At the time, we felt like nobody really did it in an efficient AI-based manner, sort of seamless. And we thought we had a chance to develop something. But then we kind of faced all sorts of problems that I can talk if you want to.
Yeah, well, that's the original vision. And then, of course, as you said about building it, I would position it as learning. Like, what did you learn, and what insights did you uncover that I could learn from, or the audience could learn from?
I've learned a number of lessons. Number one is that being a newcomer to the industry, it's a very hard sell, which is kind of obvious lesson, but especially for us, both my partner and I, my business partner, we came from different industries, finance, fintech, and sort of the healthcare. So to establish that rapport, and you may have the best product in the world, but if you don't have sort of the networking aspect, I feel like it's very hard to succeed in healthcare. So you need time, you need networking, and it takes a lot of time. So that's the first lesson. The second lesson is that even though I mentioned there's so many healthcare AI and digital health apps, there is still this this kind of adverse reaction from especially big players, whether it's payers or hospitals, when you try to tell them how this particular product can help you. The attitude that we faced, especially initially, was that you guys, like 5 guys in a basement, you really think you can help us, Cigna, build something in data science? We have 200 of our own data scientists. And that's a true statement. The problem is that they have 1,000 other projects. This may not be on top of their list. We already have a product, and all we're asking is that, look, you can test the product. It's already there. But they have this attitude that they know best. And of course, after years, I've been kind of following the marketplace. Almost none of them kind of built what we were kind of talking about. It's the products, especially on the AI side, that these big corporations, they're building is kind of like, either they have some issues and they have to be shelved, or the bureaucracy is so high there that they just ignore this whole market altogether.
So would you say like a non-invented here culture, or more of a insider with all the acronyms and reimbursement things? What was the biggest source of the problem?
I think it's the perceived market power of some of these corporations. In other words, I feel like once you get in some kind of power position in the industry, you prefer the status quo. You look at your cash flows and your revenues, and you're like, well, why break something that's not broken? And I feel like a lot of these corporations, they have this attitude. And that's the reason that, in my opinion, we haven't seen much innovation, especially in AI and digital health in healthcare industry, because in my view, I don't know if you want to call it monopoly or monopsony, or I guess oligopoly, because it's not just one company. But in certain industries, my opinion is that there is the oligopoly power, and they wouldn't let newcomers and innovators through, because this is how they do things. They are used to doing things in a particular manner. And I think once you get that power, you're actually, it's not in your interest to be innovative.
Yeah.
So that's
So
where we are.
I run a VC fund in Nashville, and that's one of the reasons we started here in Nashville and didn't move to New York, Boston, Silicon Valley. Because I think in healthcare, particularly in healthcare, the human life is at stake much more so than in other industries. And so that means that the regulatory bodies have a lot of power and will flex that power. That probably is good to protect public health, but it also can be overused or hidden behind to protect other things that aren't necessarily for the best for the patients or the providers or the payers, really, anyone.
I agree. It goes both ways. I think the history of antitrust has shown that, in my opinion, there could be some positives when a company or corporation gets too big, like we've seen in the history with was the Bell, AT&T/Bell, and was Microsoft. They're broken up, and actually new innovations came out of that. But I feel that in healthcare in particular, I don't see a regulatory action. The FTC and Department of Justice, at least from what I'm reading, they're going into some regional and mid-sized players, which I guess is justified. But I wonder why in healthcare they're not going after the big guys. So it's kind of like, in my view, kind of very misplaced, the effort that they've been making. I'm not criticizing their job, but I'm just kind of questioning what exactly, why they're going into some local players as opposed to addressing the big issue in the industry.
Yeah, I'm not sure about the FTC regulation, but as far as like HHS and CMS, FDA, it's sort of like incremental change. They test things, and then as soon as you can see that it's safe and effective, then they will begin to allow innovation in. So sitting here in Nashville, we're able to work with the big provider groups and really just try to understand what do they want to make improvements on in the next 6, 12, 18 months, as opposed to just sort of changing everything whole cloth. Not that I don't think that would be valuable. I just think it doesn't really work so well in healthcare. Silicon Valley has several times tried that, and it gets stuck in the regulations because it's human life's at stake.
Right.
So tell me where Well.ai is right now. You're also still on the board, but you're no longer CEO running it anymore. Is it still around? And is there a product that we could test and talk to the audience about checking it out?
Yes, absolutely. Our initial idea was to give it directly into the hands of patients. But over time, we evolved. And as you mentioned, with regulations, it's really tricky to do direct to consumers. So now we work directly with businesses, mainly medical practices and hospitals. I think the best way to test the product is to sign up for a demo on our website, well.ai.health. We have, at the top there in big letters, we have the demo scheduler.
So I'll link to that in the show notes. What is
the
most common use case, or what should people expect? What does it deliver for them? Say I have a medical practice with 30 docs. Is that the right profile?
It's a very good profile, yes. That the size approximately we're working it with usually 10, 20, 30 physicians. Right now, it's actually the very, I would say, sophisticated, expensive IT system for medical practices. So we started with AI, but because of other needs and other requests, right now it's basically I would say, full-blown digital front door system. So you can, but in the end of the day, it's a communication device between patients and doctors. So the AI, the technology, the automation makes it that communication easier. So in many cases, you don't have to call the office if you're a patient. You don't have to sometimes to go there. Of course, if it's something extreme, obviously you do what you do. But the idea is, especially for more routine things, routine symptoms or routine questions, the organizations we work with, they are asking their patients, hey, you can go to the system 24/7. You can open this app on your iPhone. You can sign up for telehealth. You can chat with a nurse. You can, access front desk. You can schedule something. You can access your actual medical records without going to Epic. Now there's an asterisk there that it really kind of depends, what where you are, because if you have a doctor outside of our system, then obviously you're not going to have those
Your
records
system
at,
can
the,
only
at least yet.
see what the doctor has access to, I would think.
Whatever that practice has access to, the patient has access to. So, but patient can actually add their own medical records. So, and the advantage is that they can quickly access our AI summaries, and we have the tool called the Concept Cloud, which is basically in one visualization you can see all of your problems. Sort of, if you had something very persistent over the years, it would say something like diabetes or something, and it would actually, when you put a cursor on it, it would actually tell you what's your dosage, for example, for medication for that particular problem. So it's a lot of sort of automation simplification using AI, but also using our other technology. So again, saving time for patients, making triage, making communication with the office more efficient. That's, in the end of the day, what it's all about. Again, we started with AI. We evolved into this digital health system.
Yeah, it's almost a practice management system with patient communication as a focus. Is that
correct?
Yeah. Okay. And I'll send people to the website. They can check it out. And is it in market where you're in production and can sell to practices now?
Absolutely. Yeah. We have live patients. We have live doctors.
Yeah.
Every day I talk to patients and doctors. Yeah.
Right. Okay, good. And then you also started this Substack newsletter called AI Health Uncut. And it's a great newsletter. That's how I first found you, is looking at that, trying to catch up on all the AI changes going on. You had one come out today, as you've mentioned, reviewing a book. But and I want to dig into that in a second, but talk more about the overarching themes that you cover in the newsletter. It's really kind of a deep dive into AI and healthcare and how the startup world, because so much just changing, how it all is fitting together. Is that fair?
That's fair. And what made me do this is just a lot of questions and not a lot of, I would say, honest information around AI and healthcare, venture capital invest in healthcare, certain products and startups in healthcare.
Yeah, there's a lot of hype and marketing buzz, but you're much more direct and honest. I mean, you might get excited about a new technology, but you also, I feel like the newsletter is very clear, and there are some things that are overhyped and some things that maybe are not getting enough attention.
No, I appreciate it. Again, folks must realize that I came from math and AI background, so I'm all for technology, but I feel like a lot of people in the industry, they have some alternative motive for hyping up certain technology. And so, I'm trying to sort of showcase my writings as sort of independent and neutral, but because I'm in the industry, certain people may suspect that I'm doing also something that may not be totally independent. But from my personal perspective, this is separate from my business. This is separate from anything else. This is just my opinion, my honest stories, insights that I feel like, at least when I looked at certain information and insights, I couldn't find it. And so, being honest, sometimes being, on the receiving side of some very, spicy comments and, I don't want to say hateful comments, but when you write in this provocative manner, some people tend to get upset, and that's okay. But I feel like this critical look into healthcare and technology and AI applied to healthcare is what we need at this point in time. My final goal is to uh, make sure that we understand both pros and cons of new technologies, and also how we implement new technologies in healthcare um, responsibly and safe. And so that's kind of the bottom line. And again, I'm looking at both positive and negatives. It may seem that I have a lot of criticism of particular products and particular technology, but at the end of the day, I just want to kind of find the truth. So that's why I started the newsletter.
Yeah, yeah. And so this week you're reviewing a book, Unicorns, Hype, and Bubbles by Jeffrey Funk. I have not read it. I just heard about the book this morning when your newsletter came out. But let's talk about the book, and then maybe talk about a couple sections in there. So how did you come across the book? Do you know Jeffrey? How did you get associated with him? Or did you just get asked to do it?
Oh, that's to do it. I've known Jeffrey's writings, especially on LinkedIn. He posts something every day, something very, I think, insightful. And so I got to know him through social media, I guess. And I don't know, just through his writings, because I've been, I guess, his reader for, at least a couple of years now, I guess. I know he's thoughtful and I think respectful, at least in that LinkedIn community person. So he reached out. I said yes. I didn't promise anything. But the funny thing, when I started reading the book, I'm like, oh my God, it's almost like all of my Substack stuff that I've been writing. It's like almost,
Yeah, kind of rhymes with your
I
theme
did
a little bit. Yeah.
rhymes very closely. I was like, this is like eerie almost. But yeah, I mean, great book. I like. I actually made a comment. Why don't you have more, charts and graphs? Those like visualization is so important. And he actually got back to me saying, what, you have to talk to my publisher because that's not what I wanted. So there's a reason that I guess they minimized the number of graphs there. But other than that, I mean, I thought it's very thoughtful. He looks like he's had some, 20, 25 years of experience in the industry. Did previous writings. I actually read a couple of his articles even before this book. But what I like is that, I came from academic background, so evidence and data are critical to me. And the fact that he is almost every sentence he has a citation or reference, that tells me that he spent quite a bit of time on this research.
Yeah. And so in your summary, you talk through kind of unicorns, hype, bubbles, the Gardner hype cycle. Are we in a AI startup bubble now or not? I think we are. I think you came out that we are. But what I wanted to focus on, you dive into Tempest AI, Palantir, and Babylon in a really interesting way. A sort of a compare and contrast 3 different companies that are all, taking a version of AI insights or intelligence and bringing it to market. Maybe talk through your analysis there.
Yeah. So Tempest AI was one of those companies. I guess like one of rare IPOs this year. We don't have many. and I think there are good reasons for that, or I guess bad reasons. But that was one of the moments that people got excited. They, their latest round was like 8.1 billion, and as with so many other IPOs, it tanked. Like for the first 7 days, it lost like 37%. I was writing about, and it's back now. Again, I'm not, I don't want to kind of speculate on kind of stock price. I think that this particular company, Tempus, has a lot of things to sort out. I think the fact that it's, I was looking at the balance sheet, looks like it's moving in the right direction, but obviously, as with most of digital health companies, profits are not on the horizon yet.
Yeah, I think it's
But
hard. Getting public is a huge milestone for any company. And it's also quite difficult to be a small, growing, high-growth healthcare company and be a public market where you have to every quarter report. And you sort of contrast that against Palantir and Babylon. Palantir has partnered with some large health systems that I know of, Tampa General, LifePoint, some others. They seem to be doing well. Babylon had the opposite experience where they went bankrupt maybe 19, 20 months after they went public. And Tempus is sort of a question mark, right? Like, are they more like Palantir or more like Babylon? That's what you're exploring.
Yeah, I was exploring. I actually wrote about this a few months ago. So I was kind of referring to that previous research. So in the previous research, and I could give it the link as well to that article. But I was kind of thinking about it, back to my Wall Street days. And I mean, healthcare is a little different. Palantir is obviously not a healthcare. Well, they have application in health, but it's a data company. It's an AI company, and that's why I put Tempus in that category, because even though their biggest segment is still medical lab services and what they call genomics, the business segment, but I don't know. I feel like in terms of margins, I expect them to develop their data segment, pretty quickly, because I think that's where eventually, hopefully, the profit is going to come from. But in terms of comparison, I have this what I call 21 criteria IPO valuation dashboard, and that other article actually look at the dashboard from the prism of these three companies.
No.
And there is no, there's no definite answer. I thought Tempus was kind of in between, just because it kind of started out as maybe Babylon in terms of their claims, their AI developments, and sort of healthcare projects. But I think at the end of the day, I feel like they're more of a data company, and that's where they're close with Palantir. The reason I chose Palantir because I was fascinated how, I guess, disciplined they were. It's almost like it doesn't happen very often, but it's almost like an Amazon story that they're being constantly criticized by analysts. It's like negative cash flows and new projects and new liabilities, but in the end it all paid off. I mean, they were doing a lot of projects, and last year they finally broke even. They found a path to monetization.
The best way to silence the bears is to execute, right, deliver.
Right. And I think Palantir, and again, I have this dashboard, but they have, even when they were losing money, I was looking at like before IPO and after IPO, balance sheet. They're still pretty strong in terms of all this F scores and accounting metrics, unlike, let's say, Babylon. So so you cannot really predict. Like nobody's claiming that they can see the future, but sometimes you can kind of tell looking at the balance sheet in combination with the what kind of products they're developing, what kind of R&D they're doing. Babylon, obviously, in my opinion, it was fraud. The founder and I guess the board didn't reveal that basically there was nothing there under the hood. They were claiming a lot of very advanced AI, and at the end of the day, it was almost like a spreadsheet that was not capable of doing much. And that's in the end of the day, that's why they went down. So
Yeah,
like,
so
if you,
I'll link to your previous newsletter if you let me know. I think it'd be great for the audience to have that dashboard because even though it's not perfect, there's several aspects to it. It can give a lot of clarity on what to look into more or where to be nervous about something, where you might see that it might have a lot of momentum.
yeah,
Almost like
so
a
yeah,
useful cheat sheet to like put these things on and then be able to sort of compare
right,
one company to another.
yeah. So again, it's kind of funny. Like to summarize, no one can see the future, but I find it interesting to find this analogous maybe path to either success or failure. And I feel like the reader or whoever is interested in the analysis just have to make their own conclusions, essentially. But again, the parallels are kind of interesting. That's what I always kind of been fascinated with. You cannot repeat history, but sometimes you can find some little things from history.
Yeah. So then I want to talk about this concept of the healthcare innovation mirage, I think is what you called it, where we're sort of building APIs, but those aren't really breakthroughs. They're connectivity. Talk through that concept, and then I want to ask you about sort of how we fit into the existing monopoly or mismonopoly, framework by doing a breakthrough. There's a tension there, I think.
There's definitely tension there. In today's article, I was kind of combining my knowledge with the wisdom of Dr. Funk's book. So I think Mirage was my term, but there were a lot of good stuff from his book that I cited. So first of all, he is going almost like top down in terms of innovations. I'm more kind of bottom up. Here's what I mean. So he started talking, especially beginning of his book, about sort of grand scheme of things. He was saying, just look at the century of innovation. Where were we 100 years ago with electricity and cars and so many great innovations in pharmaceuticals. And so in his view that what we've had over the last maybe 2, 3, 4 decades, there were some great innovations. I would say like internet and smartphone, in my view, are actually not marginal. But Dr. Funk makes this claim that for the most part, those are marginal and insignificant innovations. So he was giving examples. For example, the invention of all LED lights, right? So it's like, well, yeah, they're better than LCD lights. They are more efficient. They you don't replace them for many more months. But in terms of kind of impact of human life, it's like, well, no light versus light is a much bigger
Right.
impact than
You discover like the creation of the light bulb from nothing
right.
is that's a sort of step function innovation versus maybe an incremental innovation.
Yeah, the same thing he did. He was comparing electric vehicles with the Fords, like Model T, right? So you have, you've been using, horses and buggies, and then all of a sudden you can much faster get from point A to point B. So electric is nice, but it's like in the end of the day, you get it from point A to point B. And so his kind of view was more like top down. And then he was going into more details. So I think those details, especially for healthcare, that's where our views converge there. So, I've been in the industry for 5 years, and I've been to conferences. I've met some great people. There's so many. Just want to say up front, there's so many. You just wouldn't believe how many great thinkers are out there who are thinking every day, whether it's within medical community or data science community or economist community, that have so many great ideas for healthcare. Um, but in my view, nothing really kind of disruptive or no major breakthroughs have been happening. And I've had a lot of, I guess, beef with so many people, especially in investment community and startup community. Again, I'm not saying that there is lack of great ideas. I'm just saying in terms of products, I haven't seen much sort of breakthrough innovations.
Yeah, I mean, I think to me it's very clear that there has been very strong innovations in the treatment of disease. So take cardiac disease or, I don't know, almost any disease. There's new medications with pharmaceuticals. There are new surgical devices, new technologies, new diagnostic tools. That has been pretty strong over the last couple of decades. And then when you think about how we take care of patients and the throughput and workflows and how we decide what to pay for and is it fair and all the adjudication or the business side of healthcare and how the patients work through the system, that has not seen as much innovation. And so I think, to me, that's the tension. We've had a lot, like inside the operating room or in pharmaceuticals, we've had pretty strong innovations, but not in the application of the overall system.
Yeah, I actually had a conversation with my cardiologist the other day. I heard this issue that I keep going back to him, but and I asked him, I said, what does it take for you to kind of even like marginally just change your routine a little bit? Because I'm seeing you kind of coming into the room, not to be kind of like very offensive, but you're opening your Epic. You're not looking at me. You kind of type in something. If I would offer you something that would maybe record what you're doing, and you maybe like spending more time with the patient, would that work for you? He's like, I doubt it. He said, first of all, I'm part of a corporation, so they haven't really, since Epic, they haven't really, in his opinion, kind of offered any kind of big time technology tools. He said, I haven't used AI. And, we talk, I mean, I live in Long Island, so it's like, pretty populated areas. It's not like we, have lack of like technology or doctors. So, and I think it's kind of like general attitude that, certain, I mean, I know like, yeah, I work with doctors. Some of them are such champions of technology, but I think most of the medical community, they're still very reluctant, and there are reasons for that. And the number one reason, by the way, and I've been writing about this, I had this article called Doctors Go to Jail, Engineers Don't, because for every technology doctors use, they're actually responsible for the outcome of that technology, especially if it's outside of the so-called standard of care, as you know. And so there's a barrier that I feel like we need to overcome, and that's I think that's what we have to address when we're talking about the future of healthcare.
Yeah. Now, you have been, one of the things that I like, I mean, I'm a venture capitalist. One of the things I like about your writing, and one of the things I wanted to have you on to talk about is you've been, I think it's fair to say, decently critical of the VC markets overall. The business model of venture and the whole process has some challenges. But we still need to get innovation brought to market in healthcare. So maybe how would you talk about the VC markets from your point of view? Of course, I am a venture capitalist, but I want to be open and listen to the criticism and try to understand it. Hopefully I won't screw up any startups or as few as possible. And then maybe let's talk about let's try to think of an example where that could be illustrated.
Yes, I've been writing about this a lot, and I'm again, as we talked about, I'm coming from a finance background. I actually, as part of my responsibilities when I was working on Wall Street, was actually managing the multi-asset portfolio, and private equity and venture capital was part of that. And then I was actually on the other side. I've been NLP in some of the venture capital and private equity funds. So I feel like,
And you've done your own
both.
startup. You have all the different sides of it.
Yeah, exactly. So, and that's where my observations and my analysis are coming from. It's almost like chicken and an egg story. I don't know which came first, but I feel like, the venture capital community definitely feeling a pinch. There's in terms of performance for a lot of these funds, in terms of picking the next sort of next Ubers or next Airbnbs. I think we actually have many more venture capitalist companies than ever before. But on the other hand, performance on average has suffered.
And I think those things are related. I mean, it seems like they're related. There's a finite number of really talented management teams with great ideas every year, and if you quadruple the number of venture capital firms, and you don't change the number of great founders, you either get price competition, and those great founders are able to seek a much higher valuation, which of course reduces the returns to VCs, or each VC doesn't get access to the same number of opportunities that they would if there were a lot fewer VCs.
Right. And I don't mind the number. I just think the whole process of asset allocation, especially in healthcare, maybe should be rethought. How we do it. So in healthcare in particular, as you know, it's been very challenging to find a profitable company, and but VCs, they feel like they need to allocate, especially there are some specialty funds specifically for healthcare. I feel like they're obviously they haven't been very good. The performance suffered. In every conversation I've had with venture capital, they're like, "Oh, we have this great company, and by the way, Sequoia has that company as well." And that was kind of part of the reason we looked into the company. That one of the big guys picked it. So I think the whole notion that when the industry started 80 years ago with Arthur Rock and all these other great legends, I think we evolved into something very different. I think a lot of people are actually, if you look at big venture capital firms, the people, at least I've been talking to, they actually, some of them don't even know healthcare very well, and they're investing in healthcare. So I think, came the whole kind of big loop from people being actually from the industry. So they know the industry inside out, and that's how they invest. So people maybe coming from business schools, straight into VC companies. And again, I'm talking about large players here, because I think that's where most of the problems are coming from.
Yeah, so let's define that. What would you say a large fund? How would you define a large fund?
Over $1 billion, let's say, is under management.
Yeah, so
we're talking big.
I think I agree completely.
We're talking big brand names, yes. We're talking big brand names.
I think. I am a believer in small funds where the 2% management fee is enough to cover your office costs. So it'd be just quick math. Say it's a $100 million fund. You have $2 million a year, 2% of 100 to run your office. And, you could have an okay salary if you have 3 or 4 people working there and you have expenses. But when you go to $1 billion, now you have 20 million, I think, per year to spend just on overhead. and it doesn't scale that way, right? You still, maybe now you need 8 people, but it's very profitable. And so the incentive kind of flips when you get to a very big fund, and the 20% carried interest, like where we're aligned with the LPs and trying to make money for them because we get a share of the profits. In a small fund, that's really, like for me, that's really important. I have a little $8 million fund. And so the fees are almost nothing. I need to live on, really plan for the carried interest. My partner has a $55 million fund. Those small funds, I think you're very aligned with the LPs. And as you get bigger and bigger, 500 million, 700 million, a billion, 2 billion, the 2% management fees are a lot of money. And so the 20% carry becomes less of a driver. And it's much more about getting the money out so you can raise the next fund and keep the the money train of the 2% going. Is that a fair way to characterize it?
That's exactly right. So at 1 billion, there's a saying, you're probably aware that 2% becomes larger than 20%. So that when I was on Wall Street, exactly what happened in the hedge fund industry about 15 years ago started happening. A lot of these funds found out that they can't really generate alpha. And at least in the old days, they had the story that, we have diversification, we're not like S&P. Well, guess what? They became like S&P and they lost alpha. And so especially, the bigger guys in the hedge fund industry, they converted to mutual funds because 1 or 2% for them is, for that size, when you're not generating alpha anyway, mutual fund is more attractive because they have great distribution system and great sales channels. And so a lot of them are like, what, we can just charge 1.5%, 2%, still kind of be a hedge fund, but on paper be a mutual fund. And I feel like to some extent that's what's happening right now with the larger players in the VC industry. I have to say they care less and less about their portfolio companies and kind of care more how they structure themselves. And so the 2%, as you mentioned, becoming a big deal for them. And if you think from that perspective, it doesn't really matter, I don't know what that point is, whether it's 100 million, a billion, 10 billion, but at some point they're like, well, we are, leading VCs in the funding round, so we can pick this company, and then after a few rounds, we can just unload it to some other sucker, and make money this way. It doesn't matter what the company does. It doesn't matter if there is a growth opportunity, profitability. Absolutely doesn't matter, especially for these bigger guys, because later, last, I would say, a few years, that's become unfortunate, especially after the sort of COVID, that pandemic hype didn't work out for some of these VCs, and they started losing money. This is the tactics they're using now. I'm sorry, this is what's happening. And in fact, I was reading some recent research. I am more and more inclined to think that the reason that some, especially these larger VC companies, are very tentative and don't want to lead the company into IPO anymore, is because they're making more money in secondaries. I was looking at statistics from PitchBook, and I can share with you after the call. But there are more startups. I don't remember if it was on unicorn side. I think it was a general number, just in general. There are more startups than ever. They're doing M&As instead of IPOs, and there are more startups than ever are doing secondaries as opposed to IPOs. Because for those VC firms, it's an easy way out. With IPO, there are all sorts of, as you know, there are all sorts of regulatory requirements. Now you're dealing with lockup periods. It's not as easy to get out. And so they figure, why do IPOs if I can just unload my shares to some sucker, So if you think about it like that, and again, I'm maybe I'm being extreme and I kind of generalizing. I'm sure there is some
No,
great
I mean, I think I agree
people
with
out there.
I I see a need for a seed investor or Series A investor who actually understands healthcare and, importantly, has connections with the payers and the providers and the tech providers and the device companies, and knows where is there a gap that we need to fix, as opposed to maybe something that could be too big and the industry's not ready for yet. There's a lot of timing issues around this because of the regulatory environment. I mean, obviously I'm biased because I run a small fund, but a small fund where you're sort of aligned with the LPs and you really help the management teams, I think that can be really valuable. And that also gets completely polluted if you raise too much money, because if you're managing $1 billion, $2 billion, you can't be doing a $500K investment in a seed company. Just not worth your time. So you end up doing 50 million in a growth thing, and it becomes, sort of a narrative. Can we tell this narrative and get a lot of excitement around it, and then we'll sell the shares, whether it's an IPO or secondary or M&A. We'll sort of get the story spun up, and then we'll get out of it. And that it's not that never works, but that doesn't really create value for the healthcare system overall.
I agree. And unfortunately, statistics and the data support that. For example, and I've been looking into something. I'm actually writing an article on that. But another sort of number is the amount of earnings that digital health companies going IPOs generate that are VC backed versus non VC backed. And you see that dichotomy there. If you look at those companies, and they're about equal number, I think, right now. But I was also looking at the ones that disappeared, obviously, because we cannot have a survivorship bias. There's definitely a difference. Both segments are suffering, but just statistically speaking, VC-backed companies did much, much worse in terms of earnings. So it's very negative earnings, and as a result, very negative stock price performance. So we're talking about, I was doing this analysis, we're talking probably around 70 companies right now, and it's about half right now. Half VC backed, have non-VC backed. I think I was looking at the US side only, not globally. So again, I mean, not to kind of throw more gas into the fire, but I think especially in healthcare, we have to think, definitely innovators need ways to fund their projects. That's undeniable. But I feel like we need to think the way we fund it. Maybe you're right. Maybe smaller VC funds need to step in. I feel like with smaller guys, there's more communication going on. If Sequoia comes in, and again, I'm not saying, like, I'm sure every founder would love to have business with Sequoia. But on the other hand, I feel like they come in and they say, all right, this is how we're going to do things, because our next goal is our, Series B or whatever, Series C now, So here's what you have to do, here's what you have to do with your pitch, with your direction of your company. So all of a sudden they're becoming this big bosses, And I feel like that's why a lot of this startups have been underperforming. And as a consequence, the next generation of innovators are saying, you know what? I'm seeing all these failures anyway. Like, nothing gets through. So instead of me being an innovator, I'm just gonna have some low hanging fruit, like have this OpenAI API, and call it a product, and try to sell that. So some great people basically being rational, saying, look, I cannot get through in this industry. Even if I create the greatest product ever, I cannot get through for all the reasons that we mentioned on this podcast. So I'm just gonna do the easy thing, and if it doesn't stick, I'm just gonna move on, And if it does stick, I'm just gonna ask for more money. And I don't think that's the solution. This is not how things are supposed to work in any industry. Not to mention the ones that are dealing with human lives.
Yeah, I agree. I mean, I think it's both ends, right? Like, we must have a process to help companies build real value, build a sustainable business that delivers value to a physician group or to a patient or to a health system or to an insurance company. It can't be a figment of someone's sort of hype cycle. Right? It has to be actual value to the end user, and you charge them less than it's worth to them. That's the American way. Like that has to be at the core what happens. And of course, there is marketing in great companies that are really delivering value. You still have to market and tell your story, but it can't be all. I don't think it can be all of one. It can't be all narrative and hype. You also can't be adding value but not be telling people about it. And I think the pendulum has swung sort of too far to the very large funds, sort of resting on their heritage of decades of success, but really now optimizing for the quick win, the narrative, the hype. And I think it's now swinging back to actually building products that people value and will pay for, so you have a sustainable business.
I want experts to be running those allocations. I want them to speak the same language as the founders. I feel like in the last couple of decades, as you said, pendulum swung into complete extreme when some Wharton MBAs are running those allocations, and I feel like the results we are observing right now is that the industry hasn't moved anywhere, innovation stopped, and venture capital hasn't delivered their returns to their LPs.
Yeah. Now, I want to try to end on an optimistic note if possible. I think AI better than I do, but I think AI is really empowering very small groups of people to do much more impactful products, even down to it could be two people, one person. I agree that does not make sense to build your company on a closed proprietary model that could change pricing at any time for tokens. That is idiotic. And if you're doing a startup relying on OpenAI, Gemini, Microsoft tokens, that does not make sense. I mean, you could have that, but you also need the open source, resilient, like going to be sustainable because you control it. But I think if we can get there, technology could bring the pendulum back and kind of level the playing field for smaller groups and smaller funds like myself to really compete and add value. Do you think that we could have some hope that this new technology, even though it's causing a lot of confusion and there's a new product coming out every day, it seems like, that's also going to empower really smart entrepreneurs to do great things?
There is hope. I told back, the first thing I said is that there are great people in this industry. And we actually acquired some great people from outside, from Silicon Valley, that, in my opinion, just from my interactions from the conferences I'm going to, and there are a lot of great events happening here in New York, they're really concerned. I mean, they really care. But at the same time, when you run a business, you want to run a sustainable business. And so, they're thinking as well, if I can run a sustainable business, why do it at all? And so a lot of great ideas, but we need to create a system within healthcare that, those ideas will be implemented and, helping people in real life scenarios. So for that to happen, I think, I don't know how, but the industry structure is working against innovators.
Well, don't you think a lot of VCs will fail? I mean, if you don't return funds, eventually the VC fund fails. Now, it may be definitely slower than I would like, maybe slower than you would like, but I have faith that eventually, if you're not creating real value and delivering returns to LPs, you won't be able to raise a new fund. And that will sort of self-correct to where we have whatever the natural number of, 25, 50, 100, $200 million size funds that are actually added value, that might be more sustainable. I don't know how many of those, but obviously I'm biased, but I think there's a need for seed funds and A funds, because you have to have some capital to get going.
Right. And from technology standpoint, so that's on the VC side. From technology side, again, as I mentioned so many times, we need to resolve that liability problem because, we can talk about marginal solutions and low-hanging fruit, like, in my opinion, like all this ambient scribing, for instance, which are great products, by the way. Some of them I've had a chance to test, and a lot of my friends use it. They love it. But again, they're an add-on. They're not solving big problems. Whenever AI is making a decision, that's when all the innovation stops in healthcare, because at that point the owner of that business that employs that AI would say, well, hang on a second, I'm the one responsible, so what's the purpose of using AI if I'm gonna check the AI results anyway, right? So I'm paying for this product, and then in the end of the day it adds to my pajama time anyway. So that aspect has to be solved, I think, because AI has a lot of potential. It's breakthrough technologies, definitely. By historic standards, it can do a lot of good things.
Yeah.
We just need to figure out those little obstacles, or
Yeah.
some big
Well, I mean,
obstacles.
I think that's an important thing to just clarify. So you're talking about the legal, I mean, in healthcare, just the reality is people come to healthcare because they have disease, they have healthcare symptoms, and at times they pass away. And that's just the reality. Any health system has people that die. And so we have to figure out, how do we manage the kind of medical liability, the malpractice risk, protect the patients, but also make sure that if a physician or a healthcare leader is using an AI tool, that either it's their decision, this is what you're saying, it's their decision, and they then take personal responsibility, legal responsibility, or the AI is making the decision, and then they are, I think, at some level not responsible, but then maybe the AI provider is, or who is, and that's the open question right now that you're referring to. Is that right?
Yes, and I think AI will get to some great performance that are sort of satisfying to all the parties in healthcare, but I think it's going to take a while. Again, the issue is that we can have a great AI model, 99.99% accuracy, and then it makes an error that's, from a human perspective, it's kind of silly error, right? That no medical student would ever make, right? But because the AI algorithms are built differently, they're not built like human brain, even though we kind of, the name is neural nets, it actually works differently. The errors it makes are also different, and so we have to sort of overcome that aspect as well. Because again, if it makes a silly error, even if it's one in a million, no doctor is going to use that AI,
Yeah.
unfortunately.
Well, I mean, especially if a health system or an insurance company is over 5 years treating 10 million patients, if it's 1 in a million, there's going to be 10 deaths, right? That
Right.
may be a lot fewer than when humans are making decisions. So you even could be like a net fewer deaths, but you still have a problem of, okay, well, when that person passes away, who is responsible for that? And right now we don't know. That's an unknown question.
Well, right now, no, right now, if it's a kind of standard of care / diagnosis decision, that's on doctor.
Yeah, the doctor is the
Uh,
doctor's
the,
not supposed to use AI, and if they were to use AI, like you're saying, they still have to overread and make the decision themselves, or be responsible themselves.
right. No, I mean they can use. I mean, they're great AI tools. I'm just saying, at this point, in many situations, it actually adds to their time. So they're supposed to be saving time, they're actually adding time, and it's kind of like we're going back like to the early days of EHR. Right? Um, so I think there's a lot of potential, but we need to kind of overcome this issues of liability. Outside of that, I think even by the time we get there, I think there are a lot of things that AI can do in terms of being a copilot, being sort of augmented analytical tool, being sort of an automated tool for a lot of things around your office. There's still a lot of
Yeah,
things
all the, I mean,
to be
that's
sorted
where
out.
it is. That's where it's flourishing now. All the back office,
Yeah,
note taking, billing, scheduling, all of those kind of non-clinical but time-consuming chores or activities. That's where AI is really making progress. But it's also pretty crowded. So we're seeing at Health Further, we're seeing now in the last month a whole bunch of AI companies moving into the clinic, into actual patient care, but they haven't addressed this challenge yet.
yes.
Well, Sergei, thanks for doing this. I will link to your newsletter and Well.ai .health so that people can try the demo. Anything else that you want to point to people to so they can find you online, or any handoffs you want to give to let people find you?
Those three places. So it's the business Well.ai Health. It's my Substack, which is separate from the business. AI Health Uncut, and also LinkedIn, where I would say I'm pretty active, and Twitter as well. So social media.
Yeah. Okay. Well, I'll put that in the show notes. Thanks for doing this. Really appreciate it. Be excited to
Thanks,
see
Vic.
how Well.ai takes off.
Thanks for having me. Thanks, Vic.
Okay. Bye.